Yo, what's up, everybody? It's your boy Trader Solo Dolo back as we're gonna do a Sunday watch list, right? So I didn't have a show on Thursday. Thursday is kind of, I'm still playing with the format. I definitely like to stay consistent, but Thursday I just kind of figured let me take a step back right now while I kind of figure out what I'm trying to do with that. The end of week recap is cool, but like I definitely want to get into this Sunday stuff every week because to me that helps me plan my week out, help me plan what I'm looking at. Like I said earlier, there's thousands of stocks to watch. For me, it's about kind of finding those, those five or six that I'm really kind of trying to focus on, and I'm kind of compiling this from a lot of different angles. News that I hear, charts that I'm looking at, earnings, reversals and things like that. Kind of put it all together. And hey, hopefully this is helpful for somebody. It's definitely helpful for me to plan out like my week, like I said. But yeah, let's just jump into it. I really appreciate you guys turning in. If you can give me a quick subscribe, that would be great. Or follow my social media at real_bullish on Twitter. Stock twits if you have that, and Reddit. I'm not really active on Reddit, but it's something I definitely want to get into more and more. But yeah, so let's just jump into it. It's been a crazy couple weeks. The market continues to be super, super volatile, especially for the NASDAQ and tech over the past, 2 to 3 weeks. You definitely see some correcting or softening. I don't know what you want to call it. A bubble being bursted is what people are saying. I think that's kind of extreme. I think it's just natural corrections, definitely stocks are on a high flyer, a little bit over the, since COVID, at least, since kind of like that whole, it's all started. You kind of see like, almost like a separation of like real world versus stock market. And people have a lot of theories on like why that's the case, why like, every day, life was kind of different from the stock trading world. Hey, it could be people would just have more time on their hands, day traders and Robinhood coming into play. But, whatever the case may be, we definitely see a correction or a softening in terms of tech. And if you watch the groupings over the past few weeks, you'll definitely see that. But yeah, so I'm not too worried about it, like I said, since I personally have, lowered my, own interest in tech. And when I say interest, I mean like how much I'm looking at tech versus other industries and groupings. Definitely was something on my radar for a long time. But now I'm starting to take a look at more like consumer cyclical, consumer defense, industrials and stuff, because I think other traders are also starting to look at that as well. But anyways, I don't think tech is is far and away, and it's shit now. But I definitely think that it's time to start looking at other things as well. That's what I'm doing at least. But without further ado, let's see. Enough of that doom and gloom stuff. Let's just jump into the top 5 picks for the week and why I'm looking at them. The first one I'm going to talk about, and if you know me, if you've been following me, if you watched any of my videos, I think I've always included Tesla in some way, shape, or form, especially over the past probably 3 shows. And the reason why I've been talking about Tesla for a while, they had a lot of like catalysts coming in. If you see, like I've been charting this mother for a while and stuff, especially since, and this is just, if you're looking at my screen, hopefully you can. If you can, I'm kind of fucked. But basically, this is just over the past kind of week or so. I kind of deleted all the old stuff. I want to see what it's doing, how it's charting and stuff. I played it last week a couple times. Loved it. I think it was like a 10 or 12% increase, I think, on the Monday or Tuesday. Definitely. And the reason why I'm watching it this week again is because they have that annual shareholders meeting and battery day that's going to happen on the 22nd of September. There's still kind of out to see like what exactly battery day is. But if you look at kind of like what people are saying, all the speculation, maybe it's a more efficient cost curve in terms of like producing batteries in cars for the annual shareholders meetings as well as batteries day, because those are 2 events. Annual shareholders meetings is gonna come before battery day. So those are 2 events in one day. Oh my gosh. And this is just part of it. Why I'm watching it, some of the news, they're more some of the speculation, more efficient cost curve in terms of producing a battery or car, increased battery capacity itself, and then like increased battery manufacturing overall, and like the speed to make battery and like how efficient they're doing that. So a lot of good stuff. And why I like it is because it's kind of like a known unknown. Like we know it's basically news. It's basically rumor, not news yet. And that's kind of the sphere I like, the kind of circle I like to play in, right? We don't know what it is exactly, but I still think it's going to be really good. And a lot of analysts looking at it and saying, hey, this is going to be really fun. And the reason, even if it just wasn't that, just looking from a technical standpoint, this chart, we definitely saw, a softening in terms of, earlier in the year, or sorry, earlier in the month. It feels like COVID or 2020 is like a month is a year long. But anyways, looking at kind of like the high that Tesla hit after the reverse split that them and Apple hit, about 540. Since then, it was definitely in a downward spiral. With a few days, it definitely picked it up. It actually broke out of that trend recently, more on 910, out of that downward trend, and then we saw that uptick go up What I like about that is just from a chart standpoint, it broke out of a downtrend. Great. It found really good support at this on the day level, the 50 EMA, which was great. It found some support, bounced off of that 50 EMA, never really reached that 200 down below, but broke all the indicators, all the moving averages, found some support, and then we can see higher highs and higher lows being made with some softness over the past couple days. But if you just look at the candle standpoint, it's great. It looks good, breaking out of a pattern and then reversing from that is exactly what I love to do. Also, you see this kind of average coming in, all this trading over average coming in, just slightly upticks here on Friday and stuff like that. But also great things of this RSI is picking up, right? We had a RSI kind of downplay, like it kind of coincided with the MACD kind of turning. RSI was turning down more 40, so going more to the oversold versus overbought area. And as we know, like RSI, it's like the sweet spots between 30 and 70. Closer to 30 is oversold, closer to 70 or over is overbought. So we definitely saw some of that, and I think that was natural because this thing was running, and that's why I wasn't too scared about like Tesla hitting that huge like milestone of like 540 something whatever, and then cooling off because it was running super high 83 70. If 70 is oversold, overbought, then 83, wow, 13 points over that, crazy. But still, it was going to be natural. That happened. We saw it in the MACD as the RSI come up, but now we're seeing, interestingly enough, the RSI is coming up. MACD has still been bullish since it kind of curved over after the highs that we looked at after the split, about 540. It's been basically bullish since then, or bearish since then, but there's still a lot of good money to be made, especially from a day trading perspective, but especially a swing trading perspective. And we see this fucking MACD kind of picking up now. Now the MACD is picking up. Now we can see that MACD is about to cross. RSI is coming up. We're seeing volume come in, and what the 22nd? What day is that? It is on a Tuesday. So still, you have a very interesting Monday coming up, because even though like I think the Dow or indices were down on Friday, Tesla was still up. A good 4.5% ish. So it's definitely bucking the trend. It's definitely something to bet on still. Battery Day is coming up. Elon's about to crush this shit. I'm fucking excited. I hope everyone's excited. And sometimes I think I was telling friends that you can fucking basically day trade Tesla, swing trade Tesla as the only thing you do. There's so much volatility, so much volume there, so much great price increases and decreases down, so much over and under reactions going on. You can basically just trade Tesla and be fucking good with it. Maybe I'll do that one day. But anyways, that's the first one. The next one I'm jumping into is my boys Nike. If anyone knows me, I'm a Nike fanboy. Not only from like the socially conscious aspect of it, their footwear, their kind of their gear and stuff in general, but also as a company, I think that they have pivoted so great. Like from COVID, they were basically not a direct to consumer company as much during COVID, and that it kind of forced them to be. They were already kind of moving in that direction, but I think they've been really 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 smart with how they kind of handle their COVID. Their stores are closing. They had to kind of pivot real fast. They have great apps that direct to connect Nike to the consumer, which I think is great. But also, earnings on 9/22. So 9/22 is going to be an interesting day. That's why I'm excited for this coming up week. Also on Battery Day on a Tuesday. So that the only bad thing is like I think a lot of investors are going to be watching Battery Day and not necessarily watching Nike's earnings. But still, that's not the worst thing in the world, because if you were following the last earnings, they actually kind of peaked. They kind of shit down, and it took a few weeks for it to kind of come back, because even though they had great earnings, people were still like, oh shit, like they were kind of sour about the earnings last time. So it might be more of the same with this. I'm looking at it more from like, hey, let's see where it goes. But anyways, the reason why I like Nike is because they had a great online and China penetration in the last earnings, and I expect more of that to continue into the future, into this earnings as well. Some indicators you can use also, like Dick's Sporting Goods, Foot Lockers, they've been having really strong showings and sales updates recently. So I think that kind of like, even if it's not the direct to consumer aspect, the stores that they sell with or sell from or sell via are really going up in a positive direction in terms of like sales and stuff, and foot traffic and shit. So I think you'll definitely see that in Nike as well. They've had also Nike's also they have recent like price target increases to go along with the new earnings coming up. So I think those are all tailwinds that I'm seeing, right, and why I'm excited about them. And I think with more Americans kind of going back to work, and across the world going back to work, and a possible stimulus package maybe in the works. These are all things that bode well for Nike and more tailwinds to come for them, right? I'd like more a reversal, and I think the charts are kind of supporting more of a reversal on top of like, instead of like earnings, they either go up and great, or they kind of do a reversal from a bottom. If like earnings are really tricky to pay because even great earnings, are they great enough? As we see with Lululemon, another one I'm going to call out, great earnings, but still kind of shit it out. And then a lot of things go into that where they overvalued, where you kind of paying too much per share. I don't know, like that's up to you. But at the same time, Nike's kind of in that boat where they can have great earnings, which they did last earnings, but was it great enough? I don't know. They didn't have stellar, amazing earnings. They had great, I thought, good to great earnings, and still, and that's why I was playing them on the last quarter for their earnings because they were great, and also, I was happy with hey. In the worst case scenario, I'm holding the Nike bag for a long time. Fuck it, I don't care. I love Nike. So yeah, like I said, I'd watch a reversal. It definitely, if you look at the charts over a year, so over the past year, looking at the day over day, what you're seeing right here is basically ascending triangle, right? And you saw this kind of normal pre-COVID level of 105. Nike was kind of shit below that. You see this breakout here above the 105 marker, and then it was kind of floating up, going up great. It tested the high, and this is kind of what I was tracking. It tested the high of 120-ish, and then that was kind of the ascension, and it was kind of descending after that. So, and you definitely see, it's definitely in the downtrend. You see RSI just like fucking shitting out, right? It was running real hot, and some can run really hot. Nike and Tesla are two of the hot runners. Their RSI can max out 85, 90 and still be fine. But it was definitely like a correction that was needed because RSI was so high day over day. So you definitely see RSI coming down. You see MACD, as we talked about, moving average convergence divergence. It converted to being bearish, and it looks like it's going to continue, but it's not steep yet. It's not like a super steep decline. So I think it might be just kind of like some people kind of like trying to fill out earnings. But definitely you see these longer wicks in terms of these candles, these bearish candles coming in. So hopefully we see some. Hopefully we see. I mean, I'm not gonna say hopefully we see a reversal somewhere, but I think we will see support eventually. And at that point is when I'm gonna look at it more. Like I don't want to race it to the bottom and keep on trying to average down. I want to see where it's gonna reverse at. Look for a good green day, even if it's a small candle. Look for some type of reversal from that downtrend because it's definitely in the downtrend market. But it does have some really good catalysts with earnings, and especially if they have a great earnings, that's when I'm gonna look at it and say, okay, great earnings. Broke a downtrend. Cool. Let me look at it a little bit more. And like that's how I play these watch lists. I'm watching these. I'm not necessarily playing them. I'm watching these things I'm looking at and why I'm looking at them. That's kind of what I want to go for. All right. So Nike's another good one. The other one that has earnings this week is CostCo, and also why I like Nike, CostCo, and we'll talk about the next one like Lululemon, however the fuck you say it, is because they're consumers. So they're kind of tech, but they're more consumer cyclical, consumer defense. And if you've been watching kind of like the groupings over the last day, week, month, 3 months, half a year, consumer cyclical has still been super strong, and it's kind of like one of the hitters in terms of where investors are looking at next. And the reason I like Costco specifically is because it's definitely in that consumer market. They have earnings on 9/24. They continue to have great earnings. It's kind of like an easy COVID consumer cyclical play for me. I'm not really familiar as much with Costco, but I like that they have earnings. I like that they've kind of like beat expectations, and they're expected to beat expectations even on this earnings, which is always good to see. You definitely don't want to see something that was like, oh yeah, analysts don't expect them, or they're lowering price targets. It's the exact opposite. Costco's getting a lot of tailwinds, and they kind of consistently beat earnings. Yeah, consumer cyclical, consumer defense. So I like that. I'd watch same with Nike. These are going to be reversal plays for me. I would not chase, especially since it's Costco. Like I'm not as familiar with them. I definitely wouldn't chase them in terms of like. So sometimes people chase the earnings, FOMO kicks in. People keep on wanting to make the price go higher and higher by getting in. Oh fuck, they're gonna have great earnings and blah blah blah. I'm gonna run it up and I'm gonna chase earnings. I fucking hate that. I'll do it sometimes, but I've learned my lesson, especially with like playing Nike specifically in the past. Like you don't want to do that. It's never really like bitten me in the ass so hard, but like the longer you have your money locked up in something that's losing, the worse your life is. You're just like, oh man, I'm down 5%. Blah blah blah. Anyways, I've learned, don't chase earnings as much unless it's something that you truly believe in. This one is not, especially because it's in a downtrend. And that's not the worst thing before earnings, but looking at Costco is definitely in a really, really strong downtrend overall. And that's fine. And, so downtrend, right? A descending triangle or whatever this is here. Hopefully it finds support here at this 331. It might not. I'm going to say hopefully it kind of, and you never want like stocks to lose, but like for me to get in, I want to see a really good reversal off of this on the day over, looking back a year, day over day chart. I want to look at that 200 EMA and say, okay, great, that's where it's going to find support because it did so in the past. Like it's definitely, and if you look at it, even on the worst days, it kind of touches that 200 EMA line. I mean, this is like COVID right here, so you can't really like anything with COVID. It kind of breaks down, but still, it doesn't want to trade. It doesn't want to trade below, and this is what I love about it. It doesn't want to trade below this 200 EMA. It's finding good support there, touching, and going, and then and taking off from there. So that I would look for more of the same now. I don't know like exactly, and if I'm just looking at this blind, I'm seeing a downtrend, right? And once it hits this kind of like lower highs being made, very bullish. So when it gets somewhere closer to here, I'd expect a breakdown lower. And that's just what I'm seeing here is that, hey, it wants to go lower. It can't break this channel yet. Before it goes up, it's going to have to go down more. And that's what I'm seeing here. And you kind of see growing volume. At first, like the volume wouldn't like, if I was looking at this chart and the volume was like not over average and red, then I wouldn't. I was like, okay, maybe they're not trading it as heavily, but still it's in a downtrend. People are like bearish about it, but I'm seeing like growing volume and then volume over average getting higher and higher in a selling in a bearish manner. Oh, that's already bad. It's downtrending. The RSI is shitting out, definitely topped out at like 79, 80. Right now it's, 84. I'd expect this to kind of bottom out somewhere here. But more importantly, also the MACD it converged to being bearish and then it's going and it looks like it wanted to like like the MACD wanted to like start like bottoming out to start like reversing, but it just couldn't do it. And you see some green days in here, but overall like this MACD is increasingly bearish, So those are all indicators to me that if I'm going into earnings, I'm looking at this not to buy it up until or look into it even more until it's going to hit a bottom, until I see a green day, until I see like a bar like this where the volume is green, but also the volume over average is there, over average. But still, they have a great earnings play, I think, coming up with CostCo. Man, there's a lot of bear shit now recently, and if you could see these, like I'm really trying to like find some diamonds in the rough, but it's rough. Let me tell you, the other diamond in the rough for me is Lululemon, and these are all just like, these are. I mean, you can just play what the market's giving you since last month and this month. It's been really hard to make plays, to make money, and not just make to win. You know what I'm saying? I think if you look at it to be right, you're going to be better off if you look at to make money, so you just have to be right. But Lululemon is another one. Like these are downtrending markets. It's shit. It sucks. It's just what the market's giving you. Like I said, like these are just things I'm watching, not necessarily playing, but I'm going to tell you how I'm going to play them. And I'm going to do Lululemon the same way. Lululemon actually had recent earnings, right? Really. And they were fucking stellar earnings. Let me tell you. So direct to consumer net revenue was up, was 554 million, an increase of 155% compared to the second quarter of fiscal year 2019. 155% increase over last year. I'm just gonna say that they have over $500 million in cash, but still, like they have a revenue. They hit a revenue of 902 million and beat expectations by $56 million for this previous earnings. I think it was last week before last. But they still gapped down 10%. So they had a fucking 10% red candle at the earnings after they released all that shit. And that's to say, like, no one really knows in this market right now. Like, I will say that their fair value, so the fair price of their share over versus its share price, so the fair value of it versus what it's trading at now was kind of like there's like a 67% gap between there. So you can make the argument that it's overvalued, sure. And I think that's what you're seeing here in the downtrend. It had great earnings, great stuff going on for it, but still a really, really sharp decrease, And this is again looking year over. And then when I'm doing swing trading, the first thing I'm looking for is over the last year, day over day. That's kind of like my first thing I'm looking at. You definitely see a really sharp downtrend here that started after earnings or whatever on 922-ish. I don't even think, or 92. But also, it was decreasing rapidly. It broke out of that, but still continued to downtrend, but at a slower pace. You kind of see that also in the MACD. You see really, really hard red bear signs here, and then it starts decreasing a little bit less. And then you see this like shading a little bit deeper red versus sharp red. You still see a really strong MACD convergence, so it's still in a downtrend. The RSI is under under 30. So this is way oversold right now. There's going to be a correction coming in. I think it's going to be when it corrects a little bit more. And it looks like it wants to race to this, like we looked at the last one with Costco. It looks like it wants to race at the day level to the 200 EMA, and from there have a really nice bounce play. I'm hoping that's what happens because even with COVID, as you see, like it definitely it definitely uses the 200 EMA as support. COVID taken aside, whatever that happened, but it only traded down for like a month and a half below that, and then you see it coming back. And then from there, it kind of took off. So I think we're seeing some really good correction. I think we're, two things with this one is overvalued for sure, versus like the fair value. It's correcting that. But it's still in a consumer cyclical consumer defense market, which is really hot. And I think that we'll see some definite profit taking, definitely cooling off. And then I want to watch it when it gets closer to this 200 EMA to see that reversal play, because then it has all that way to go up, baby. It has all that way to kind of to bounce back. So like I said, I like Lululemon. It fucking smashed earnings for like 2 quarters in a row that I've been watching it. It's just it didn't smash it enough. People are still kind of worried about it, but also it is overvalued. So hey, there is that into play there, right? So take it for what it's worth. That's kind of what I'm seeing with that one. So far we talked about Tesla, my baby, Nike, my baby, Costco, and Lululemon. I'm more excited for Lululemon than Costco, to be honest. Even though Costco earning hasn't even come up yet, I think Lululemon, looking at the chart, fucking sexy as shit. The other one that I'm gonna talk about to round it out with my top 5 plays is PayPal. And the reason why I like PayPal is because if you just look at it, so they had a recent Barron's mention. If you don't know what Barron's is, it's basically just like a publication, an online publication where a lot of investors look at. Like it's kind of like a Bazinga, Barron's, Yahoo Finance. Anyways, they had like a really good article about like top COVID plays, and they were talking about fintech, and maybe not fintech, but like payment processing and stuff, and how there's really a paradigm shift from like cash money to online kind of like digital, not just digital currencies, but like that whole digital payment processing and stuff. And PayPal for them was kind of like one of the leaders in that space. And you definitely see it when you go out and you're, I know some some coffee shops I go to, they won't even take cash. They use Square, they use PayPal, they use something online. It's just moving to that, right? And you definitely see that in how much this has kind of increased in such a short fucking time. All the way from a low of COVID, and it was kind of like, trading at, 124, low of COVID 82 ish, all the way to 212 at the highest, in terms of like, when it was running at its peak all time highs, which I love. It's showing earnings, it's showing love, it's increasing, especially post COVID. And I think it's going to accelerate more, how I would look at it, in the next few years, because it's a pure COVID play in terms of like like going forward. Right. But still, why I like it, because the company added a record 21.3 million accounts, 21.3 million accounts, a million accounts in the second quarter. That's up 137% over the previous year. Holy shit. They have 446 million active accounts, and they're kind of, one of their business strategies is taking like a small percentage of like the transactions from that. Oh my God, that's just money right there. And that's why I'm watching it. And I will say that it's definitely, and the reason why I like it is because you see this recent downtrend coming out, kind of similar. We'll see it. It's kind of, doing a descending triangle type thing. It found support here. Well, it might find support. It's found support here previously at 169. I'm going to say maybe break out below that. And the reason why I say that, look at the RSI, it's a bit leveled out, but the MACD is still really bullish. So I think this still has a long way to go, or some ways to go, before it's going to even out. It looks like it wants to again find support at that. And the 200 EMA for companies I'm looking at is definitely being strong. And I think that it's being tested because of this like correction or market overall kind of being more in a downtrend. It's going to find some support here somewhere. Where is it going to be? You have to watch the charts to figure it out. You have to come into it every day at the end of the day. It doesn't have to take your time during the workday. Come in, after you're done, before you go to sleep, and just say, okay, cool. Let me see what the charts are telling me now. And I think if you look at them that way, it doesn't take a lot of your time, and then you can kind of map out your days. But those are the ones that I'm looking at, and why a lot of them are going to be reversal from the 200 EMA plays. But that's just what the market's giving me in terms of the shit that I'm looking at. Again, just to wrap it up, got Tesla, we got Nike, we got Costco, Lululemon, PayPal. Those are my top fives that I'm taking on this week, or at least watching. I Tesla is probably for me. If that's the only one and that I'm watching that's really bearish or bullish right now. In terms of just looking at the charts straight up, but a lot of other ones are going to be kind of stretches. You're going to have to really try to watch them a little bit more. Those are what I'm doing. Like I said, in a week I might trade zero, I might trade none. In the past 2 weeks that I've done this, I've actually traded all five, which is stupid. I'm never going to do that again. But it's just about finding the ones that work for you, right? Watch the charts, go for it. Parting takeaways: don't be in a rush, don't be rash, and don't be in a rush. Take your time and watch where the trading is going, right? So if you come into it and you don't do anything on Monday, come in on Tuesday and see where the volume is. See where the previous day volume. See, come in on Tuesday night and see where the trading was on Tuesday. On Monday, see where the volume's coming in at, where people are playing at, to kind of guide where you want to go next. And I think that's a really solid way to go about it. Like I said, wrap it up real quick. I'm just gonna try to make it quick, but I'm gonna go for a run before this rain gets here. But take it slow, take it easy, and protect your chicken, because the market doesn't give a shit about your money. You got to give a shit about your money. If you could follow me on, maybe some Reddit, Stock Twits, Twitter, real_bullish, or just give me a sub here, and hopefully I can go live eventually. But yeah, I really appreciate the love and support and the hate. It's all good. I really appreciate the time, and have a good one. Peace.